Hey everyone, welcome back to Corporate Decoder, the place where we uncover the secrets hidden within company reports. And trust me, this one has a few twists and turns that might surprise you. Could a company's reliance on a few key clients and suppliers be a ticking time bomb? We're diving into CU Group Holdings Limited's latest annual report to find out. If you love getting straight answers from dense financial documents, make sure you hit that subscribe button. And if you want to go even deeper with a community of like-minded dissecting experts, join our Discord server. It is linked right below. So, we are looking at CU Group Holdings Limited's annual report, which is a Form 20F. This is essentially their yearly check-in with the US Securities and Exchange Commission, or CC. They are a Hong Kong-based company that is listed on the Nasdaq stock market, and this report covers their performance up to September 2025. Let's jump straight into the numbers for the fiscal year ending the 30th of September 2025. SU Group reported revenues of about 192.4 million Hong Kong dollars, which translates to roughly 24.7 million US dollars. That is an increase from the previous year, but hold on. The cost of generating that revenue shot up even more. Their cost of revenues jumped by over 20%, reaching 161.6 million Hong Kong dollars. This means that for every dollar of revenue they brought in, more of it was spent on making that happen. This hit to their revenue generation directly impacted their gross profit. It dropped by a pretty significant 35.4%, going from about 47.6 million Hong Kong dollars in the prior year to just over 30.7 million Hong Kong dollars, or nearly 4 million US dollars in 2025. This resulted in a gross profit margin of only 16%, down from 26.1% the year before. That is a big squeeze. On top of those rising costs, their selling, general, and administrative expenses also climbed by a hefty 35.2%, reaching 48.7 million Hong Kong dollars. This means their overhead costs went up significantly while their profit shrunk. The consequence of all this, SEU Group flipped from a net income of 10.7 million Hong Kong dollars in 2024 to a net loss of about 18.5 million Hong Kong dollars, or close to 2.4 million US dollars in 2025. That is a pretty dramatic swing from profit to loss. Looking at their cash situation, it also took a hit. Their cash and cash equivalents dropped from over 52 million Hong Kong dollars in 2024 to about 25 million Hong Kong dollars in 2025. They still have cash, but it is significantly less than they did the year before. And this shows up in their cash flow from operating activities too. They went from generating positive cash flow of over 14 million Hong Kong dollars in 2024 to using up nearly 15.5 million Hong Kong dollars in 2025, just to keep the lights on. That is why they're burning through their cash reserves. Interestingly, their restricted cash, which is money they can't easily access, went up substantially from nothing in 2024 to nearly 10 million Hong Kong dollars by 2025. This usually means they've had to put up collateral for contracts or guarantees. Remember their initial public offering back in January 2024? That brought in about 24.3 million Hong Kong dollars. However, looking at their use of proceeds, it seems they've burned through a good chunk of that as their cash reserves have declined. Now, let's talk about the story behind these numbers. One of the biggest risks they highlight is their reliance on a few key suppliers. For instance, their single largest supplier accounted for over 20% of their total purchases in 2025, and one supplier alone made up over 32% of their total trade and notes payables. If any of these big suppliers falter, SU Group could face serious disruptions in getting the parts and systems they need. It is a similar story with their customers. In 2025, one customer made up over 10% of their total revenue, and two customers accounted for a significant portion of their outstanding receivables. That means if even one of these key clients has a problem, it could seriously impact SU Group's bottom line. It is a classic concentration risk. They're also in the business of security guarding and screening, which are very labor intensive. They mention that employee turnover is quite high in this sector, and they face risks from labor shortages and rising labor costs. This is especially concerning in Hong Kong, where the minimum wage has been increasing. They are not able to easily pass these cost increases onto their clients, which puts pressure on their profits. Their losses on selling off old equipment also spiked significantly, jumping over 200%. This was mainly because they sold off some X-ray machines as rental agreements ended. So, putting it all together, CU Group Holdings Limited moved from a solid profit in 2024 to a notable loss in 2025. Their revenue grew, but their costs outpaced that growth, squeezing their profits and burning through their cash, their heavy reliance on a few major suppliers and customers. Coupled with the labor-intensive nature of their security services, presents significant risks. Leading the company, Mr. Chan Ming Dave holds a substantial amount of voting power, about 98.9% when combined with other directors and officers. This gives him a lot of control, which can be good for decisive action, but also raises questions about potential conflicts of interest and minority shareholder protection. To wrap it up, Soo Group is facing some serious financial headwinds. While they've shown revenue growth, their profitability has taken a significant hit due to rising costs and operational challenges. The concentration risks with suppliers and customers, along with labor issues, are major red flags. Their strategy might need a serious rethink to navigate these challenges. Alright, that's our deep dive into Soo Group Holdings Limited's latest report. What do you think about their financial performance and the risks they're facing? Let us know in the comments below. If you found this breakdown helpful, please give it a thumbs up and subscribe for more corporate dissections. And don't forget to join our Discord community for even more insights and discussions. Thanks for watching, and we'll see you on the next episode of Corporate Decoder.